Going on, everybody? It's Stas here. So the stock market had another day of selling today, guys. S&P 500 down 40 points, down 1.2%. The Dow Jones ended up going down 160 points, down 0.6%, as the NASDAQ 100 led the sell-off, down about 300 points, down 2.6% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks here that I'm watching and looking to buy as we're getting into November of 2020. And I also want to go over what I've been doing. What stocks am I holding? What did I do today? And in general, where my head is at right now as a trader and as an investor. So if you guys find value, hit the like button, make sure to subscribe to the channel, and check out all the free links down below, the Discord chat, the Facebook group. And if you guys want 3 free stocks, this is your last day to get those 3 free stocks. Use that Webull link down below, deposit $100, and you get 3 free stocks valued up to $1,600. So without further ado, guys, let's get right into the video. And what we talked about yesterday, guys, in the update video yesterday, ended up playing out here. We talked about how the S&P 500 saw a big level of resistance at 33.30. You guys can see yesterday and the day before, actually, we had a reverse head and shoulder form here on the 28th. Heading into the 29th, we pretty much completed that as we rallied up a little bit above 33.30. But you guys saw in yesterday's session the big sell-off at the close of the market, right? We hit 33.30. We consolidated there a bit for about 30-40 minutes. Then we saw an aggressive drop heading into the close, and that was a bit worrisome to me. And I talked about that yesterday, as that was overall, I mean, the Bulls won the day yesterday, but the Bears ended up getting the last 30 minutes of the market, and that just showed weakness at 33.30. And with today's gap down and massive sell-off, now that we can see it, guys, right, on the 5-day 5-minute, the downtrend continued, right? We hit a lower low. We consolidated pretty much all day at 32.30. Then we saw a nice pop into the close of the market. And after hours now, guys, if you take a look at SPY's actually up after hours a good chunk. So we are seeing a bit of bullish action here towards the end of the day and after hours, but still, the Bears are still in charge. I mean, take a look here. SPY, which is an ETF that tracks the S&P, it closed under a big level, 328, right? That's a big level on SPY, right? That was a support for the past couple of days. Well, once here, twice, right, on the 28th and the 29th, and we pretty much failed there all of today. Not really yesterday. Actually, yesterday too, after market hours, but today all day we failed at 328 pre-market, during the market, and now we're looking to test it again after market. So for next week on SPY, look at 328. I mean, if 328 is able to break here, there could be some action, maybe up to 333. That could be the next gap that we fill, and that could be in terms of a relief rally. What does end up happening, right? If we do end up getting a bit of a relief rally, 328 to 333, that could be the move on SPY. And when it comes down to the S&P 500, how that equates to the S&P 500 index, maybe if we hold 32.30, we see some sort of relief rally back up to 33.30 on the S&P, right? But overall, we're still downtrending all across the board, and the Bears are still in charge. And I think, guys, I mean, if we break the big level here on the S&P is around 3,200, 3,230. I mean, if we break that, there could be a big leg down coming here. And you guys can kind of see, I mean, this is looking slowly like a descending triangle forming here on SPY or S&P. And probably on SPY too, we'll be able to see it. Yeah, I mean, slowly, right? So on SPY, watch big support coming up at about 327, 328, 326. If that breaks, we might see a little leg down. I mean, maybe down to the, high 3 teens, right? Maybe 318, 319, 320. So that's kind of what I'm looking at here overall on the SPY and the S&P. Dow Jones ended up breaking a big level of support. This might have been yesterday, and it led on into today as well. Dow Jones broke, I mean, it was the previous day as well. So the past couple of days, Dow has been getting slammed. It broke 27K. We talked about that a couple of videos ago. That's not a good sign, right? If we take a look here, let's say on the 90-day chart, we zoom in a bit, you guys can see how big of a support 27K was, and now, quite honestly, we broke 26,700 as well. We're trading right around 26,500 now. So for next week, watch and see what the Dow does. Do we break 26,700? If we do, we might see a relief rally back up to 27K. But as long as we're under 27K, the bears are still in charge. And this is kind of looking like a double top, which is pretty bearish, of course. And we could be going lower, guys. And of course, we're seeing the election next week. We have a bunch going on with the economy, with the CV. So there's a lot moving in the markets right now. So you guys have to be careful. And the volatility has been up. I mean, take a look here at the VIX. It's almost at 40, right? Literally a couple weeks ago in August, it was at 20. So there's a lot of volatility. I don't think it's going to stop. I think next week there's going to be a lot more volatility. So be mindful of that, guys, right? And when it comes down to the NASDAQ 100, we ended up holding a pretty key support, 11,000, which is a good sign. So if we end up holding that next week, maybe a relief rally up to 11,200. But the second 11,000 breaks on the NASDAQ, that is where we're going to see another leg down. And the question is, where could that be? Where could that leg down be? I think it could be around 10,800, right? That could be where we go. And that is where we double bottomed here back in the middle of September and rallied out. I mean, you guys can see the reverse head and shoulder here on this 2-hour chart. Let me outline it for you guys, right? We had a reverse head and shoulder breakout here, and right around where the head was formed, that's roughly 10,700, 800. So that could be where we do end up pulling down to. So keep an eye on these levels, guys. Again, I can't stress it enough. You guys have to be careful next week, right? There's going to be a lot of volatility, and I don't think the volatility is over quite yet. So be very careful, guys. And let me know your thoughts down below. And I forgot to mention yesterday the GDP numbers, which are clearly not pulling up the market. I mean, the market doesn't care at this point, but I'll mention it anyway. U.S. GDP numbers accelerated at a 33.1% annualized pace in the third quarter. The Commerce Department reported that was better than the 32% estimate from a Dow Jones economist survey. And whenever these numbers come out, guys, you have to realize they're annualized, right? So the GDP didn't grow 33% in one quarter. It grew 33% divided by 4, whatever that is, right? What is that off the top of my head? I mean, what, like 7, 7.5%, 8, something like that, right? Just do 33% divided by 4. So those are the GDP numbers and some thoughts and technicals on the markets in general. Let me know your thoughts down below if you guys have any thoughts. Now, what did I personally do today? I've said on the channel that I have a set price target on Apple that I wanted to add more to, and it was at $110. So I ended up adding more Apple today at $109, roughly $109.50, a little bit under my price target. But hear me out, guys, right? You know that I've been in Apple for some time now, around 115, and I've said that 110 is where I'm looking to add more. But here's the little caveat here. I didn't add a lot, right? Because I said earlier, volatility's coming, the election is next week. It's going to be fun. Let's just put it that way. So I only added a little bit, a small little nibble into my Apple position, and I plan on going heavier in the next gap down. If there's a next gap down, which is likely. Let's just put it that way, right? And that would be around 105. And I said this in the chat, which again is linked down below. Make sure to get in there. It's free of charge to join. I said in the chat 105 is where I'm looking to add more. So if we get there, I'll go heavier, and that is roughly where we bottomed out back in the middle of September. So 105 is my next target on Apple, and I don't think we're going to go much lower than 105. I mean, if we do, anything can happen, guys. Remember that. If we do, $100 is where I'd go even heavier. And then at that point, guys, if we go under that, which I don't want to say I doubt it because anything could happen, guys, but I doubt it. Let's just put it that way. But if we go under 100, I'll go even heavier there and pretty much stop buying at that point, right? And my long-term swing would be built. pretty much, right, at 105 and 100. So overall, I added a little bit more Apple today. And quite honestly, guys, I feel like, the earnings weren't that great. They weren't a blowout like we saw from, let's say, Google or Amazon or even Facebook, but they weren't that bad. And I feel like a lot of people are underestimating the power of 5G and the next iPhone cycle. I think a lot of people are underestimating that, and I think next quarter is going to be a lot better for Apple. And we'll see. 2.5 months will come here in a snap of a finger, and we'll see how they ended up doing. So that's all I did today, and I'm still in my EA and my workhorse positions, which both of those are down quite a bit. Workhorse a little bit more than EA, but overall that's what I'm doing, right? And I'm in about, at this point, 60% in the market, about 40% cash here. And that's kind of how I'm positioned heading into next week. I like having that cash, especially for this election week, due to the volatility likely coming up, to take advantage of opportunities. So let me know in the comments, guys, what did you do today? What are you looking to do next week? Are you mostly cash? Are you in the market? Let me know. I would love to know your thoughts. So today, guys, we didn't have many earnings. We had AbbVie, we had Exxon, which I didn't even look at personally yet. But let's just go over some of these very quickly. A lot of the big names already reported previously this week. We had Big Tech yesterday and a bunch of other ones before that. But ExxonMobil, let's go over here very quickly. They reported earnings. Let's take a look here. EPS came in at negative 15 cents versus negative 25 cents, and sales came in at $46.2 billion versus $43.69 billion. And I've been on record, guys, I'm not the biggest energy guy. I'm not a fan of these stocks. I think the dividends in danger, which a lot of people invest in these for dividends, with the way that the airline industry and all these fuel-seeking industries have been disrupted recently, and in the future, I think it's going to continue. I think these stocks are risky, but again, I'm going to report the earnings to you regardless, and I'm just going to give you my honest opinion along with it. But overall, Exxon did okay in terms of earnings, and the stock is still beaten down with no reversal in sight, right? But one stock that did well was AbbVie, one of the only green ones in my watch list today, other than, I guess, CL2 was green. Colgate, I think they reported earnings today. They reported earnings today. But other than Colgate and AbbVie, these were all red for the most part in my watch list. And Google did well as well. But AbbVie ended up doing EPS of $2.83 versus $2.76. Revenue came in at $12.88 billion versus $12.72 billion. And they expect the dividend increase in 2021, which I'm very happy about, to increase 10.2%. The dividend in 2021 to increase 10.2%. And for me, guys, I own this, and you guys know that, in my M1 Finance portfolio, which is, you can check it out down below, and you can check out my playlist on YouTube showing you guys how I've built that portfolio for the past year, a little bit over a year. And I've been buying that one for quite some time now, just for the dividend mostly, guys, as it is about a 5-6% payer, and it increases its dividend pretty nicely. So I'd put it in the dividend growth category. So I'm happy about that. AbbVie doing pretty well, but the downtrend is still intact, very similar to XOM. So I wouldn't necessarily trade this, but as a long-term investment, I'm buying it, right? I might even buy some next week, just the dollar cost average in. And we also had Starbucks. I think they reported maybe yesterday, maybe the day before. Doesn't really matter. But they reported EPS of 51 cents versus 31 cents estimated. And revenue came in at $6.2 billion versus $6.04 billion. So a double beat there on Starbucks. Pretty nice EPS beat as well. And what we notice overall is an ascending triangle. At least that's what I see here on the 4-hour chart, right? Big resistance, big wall, about $90, $91, but we're still holding the uptrend here, as you guys can see on the 4-hour chart. So I'm thinking if this uptrend holds, $87, the 180 SMA holds here, we could squeeze up to about $90, $89, $90, maybe $91, which does give Starbucks a nice 2 to 3% upside from here. And if that breaks, we might be going mid-90s, guys, which is roughly the all-time high, I believe. Let me double check that. Actually, no, the all-time high is higher 90s. But either way, guys, take a look at that 4-hour ascending triangle. We could be going higher here on Starbucks, and we see a bunch of buy ratings, right? Goldman Sachs buy rating, BMO Capital adjusts their price target to 93 from 75. Credit Suisse increased the price target as well from 92 or 82 to 92, has an outperform rating. So a lot of these analysts out there, the big firms, they're bullish on Starbucks for whatever that's worth. And I always tell you guys, yeah, I mean, that's a good sign that they are bullish. The buy ratings, outperform ratings, the price increases and so forth. But you always have to take them with a grain of salt, right? All of the analysts at the end of the day, always take them with a grain of salt. So Starbucks is looking solid. AbbVie's looking good in terms of earnings. And a couple other ones here, guys. We have Facebook, ticker symbol FB. This one's getting slammed, down 6% today, down about $20, more like $17, but we'll round it up to $20. And I think this could be a bit of an overreaction. I mean, earnings came out yesterday, and we broke those down in yesterday's video. If you guys want to go check the Big Tech earnings video, I'll link it down below in the description. And their earnings were solid. I mean, very good at that. And the stock's selling off. I mean, pre-market or actually after market yesterday, it got to almost $300 per share. So now that we've fallen from $300 to $260 on Facebook, that opened up a pretty wide margin of profit, around 10 to 12%. So for me, I'm looking at Facebook here. It's pretty much... It's very imperative, let's put it that way, for it to hold this 260 level. You guys can see it here if my mouse wants to click. There we go. If it holds 260 and this general uptrend here, we double bottom pop, maybe we fill the gap up to 280, maybe back up to 300. That's kind of what I'm looking at here on a potential overreaction play for Facebook. And another one here, guys, if you believe that we're going to another shutdown, the CV is going to take over even more these next couple of months, maybe Zoom could be one to consider, right? This is a stay-at-home stock, a CV stock, whatever you want to call it. And now we're down about $120 off the highs. That's a big chunk. I mean, it rarely pulls down this much as of late. That's a 22% drop. And when's the last time it pulled down that much? I mean, take a look here. Back in September, it went from what? 460 down to about 340. That was about a 25% drop. And then it ripped from 350 to almost 600. So, I mean, guys, if 590 is the peak now. Let's say we pull down to low 400s, mid 400s. We end up holding it, whatever. We could end up ripping back up to 550, 600, 650, especially if we get more fear and we get not a crisis. We're already in a crisis, but you guys know what I mean. If we get, rise in the CV numbers, they continue, more fear around it, people might want to flood into ZM because a lot of people are using this in high school, college, work, friends, whatever. So many people are using it. So I'd watch for 460. And quite honestly, guys, this is looking attractive. Not yet. I mean, we are breaking moving averages. It looks like a falling knife, so I'd be careful. But the lower it gets, I get more attracted to it. Maybe $400 flat. That would be great. But overall, I'm just watching it anywhere from 400, 450 next week. I think that could be an entry. And Amazon, guys. Amazon, I'm licking my chops on Amazon, anything under 3K. I mean, if we get under 3K, 2,900, 2,800 like we did back in September, I'm looking to buy Amazon, quite honestly. And even if we get, especially if we get somehow to the 2,500s, 2,700s, I don't think that's going to happen. That's the equivalent of Apple going to like 95. I don't think that's going to happen. But if we get a prolonged sell-off here, I'm going to be buying Amazon. I'm just being honest, especially heading into the holiday season. They just reported great earnings. I'm liking it. And another one here that's starting to pull down, we cover it all the time, guys, is good old NEO. Ended up going up 16% yesterday, and it gave back some of those gains, 4% down today, which is not bad. And I'm looking to see what it does here. I mean, we've talked about how every time NEO sees a leg up, it consolidates a bit for a week or two, 2 weeks, whatever, maybe 3 weeks, and it cools off before ripping back up. So are we going to sell off here on NEO before the next rip? I think it's possible. Anywhere from, let's say, $29 to $30, $31. That could be the next entry point on NEO. And you guys should definitely keep a look at your eyes on precious metals. I haven't been talking about them a lot here, but definitely take a look at silver and gold. Both of these were up today. Silver was up 1.5%. Gold was up about 0.6%. And usually silver has more upside. I mean, it's the more volatile one out of gold and silver. So I'm looking more at silver at this point since I already have enough precious metals in terms of gold. So I'm actually looking more to silver in terms of SLV. SLV is one that I'm looking at here. It's not physical silver, obviously. It's an ETF here that tracks silver. So it's kind of similar to actually having the metal, but it's just kind of you're trading it on a screen. It's kind of like a paper silver, let's put it that way, right? So overall, we're seeing SLV here, which again tracks the price of silver. It was up 1.3% today, and overall, we're in this wedge. You guys can see it, and the fact that we held the support of it and we rallied up today, that's a good sign that we're holding the support, obviously, right? So if we end up breaking these moving averages here on the 4-hour chart, I can see a massive run in silver and SLV, which I'm personally looking to take advantage of. So I'm in a lot of equities. I'm looking at stocks all day, but I'm not forgetting about the precious metals. And I think you guys should be on the same boat as well, right? I think everybody should be keeping their eyes on precious metals and Bitcoin too, quite honestly. I know there's a lot of controversy between Bitcoin, gold, and silver, but hey, watching them all, I think, is a good idea. So overall, that's it for this video. If you guys enjoyed it, make sure to hit that like button. Make sure to also subscribe to the channel and check out all the free links down below, the Strive Smart Discord chat, the Strive Smart Facebook group. And don't forget, guys, this is the last day you can get 3 free stocks from Webull. So all you got to do is deposit $100 using that link, and you get 3 free stocks valued up to $1,600. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there. Have a great weekend, guys. Peace out.